Hey folks, here's another SPY update. It's a shorter week because Friday's a holiday, so the market just closed today on Thursday, April 6th. I'm going to go over the trades I made today and recap my P&L over the course of this week. Pretty bullish day today, as you can see, basically following this channel going up. Here's a look at my account for today. A lot of trading, but if we just take a look at SPY, some of these worked out well, others didn't. And the ones that did not work out, I had to close them, including this one at 12:46. So about 14 minutes before market closed, I bought a bear call, meaning I thought the stock was going to go down. So I sold the 409 call and then I bought the 410 call for protection. Just a small trade, $21. And that was around here, 15:45. So right before the market was closing. And because I saw the wicks up here, I thought that the stock market was going to fall lower, which it kind of did. But then I realized, oh, there's also wicks on the bottom here as it went into the close, which is this dotted blue line here. So that's why it went up and I closed out of my position. So after making this trade at 12:46, you can see I closed my 409 short call by buying it back just like 13 minutes after that. And then I bought it back for 21. So pretty much break even minus a few dollars for commission. And it's trades like this that I like because even though it did not work out this time, I basically didn't lose any money. However, if my theory had panned out and the market closed below 409, then the upside is I get to keep $21. Again, minus commission. But the idea is you get much more reward for the potential loss. Now, of course, if the stock market went up a lot higher, like to 409.8 or even 410 up here in this range, yeah, I would have lost a lot more money. But that's why you want to keep the stop losses tight. I mean, first of all, it's not likely to make like a huge move up during the last few minutes of trading, but you do still have to watch the market in case of any violent moves up or down. The other thing is theta decay is really strong at the end of the trading period, right? So if I drop down to the 1 minute at, so 3:46 Eastern is when I put in the trade for the bear call. So that would have been right here. The market was pretty much right at 409. So literally the strike price was at the money, but even then the option was still selling at 21 cents. So really it's a 50-50 at this point, whether the market will close up above 409 or below 409. However, if the market had finished right in the middle at 409, then the option would have expired worthless. So after you take probability into account, it's still worth it to make this trade. Actually, the option wasn't selling at 21 cents at 15:46 here. It was actually, because that was the spread that I was able to sell it at. It was actually selling at 23 cents, but I bought the 410 call for protection and also to reduce the capital I need to make this trade. So that's one example of a trade that I typically would make, although it didn't work out this time. But I'm going to go back to the 5 minute and talk about these different trades that I had. Like last time, I'll go in chronological order, starting from, I guess the earliest one would be this one, 7:55 or 10:55 Eastern. And this did not work out well, my bear call here. So I end up closing this one. But I'll go over why I made this trade to begin with. I sold the 408 call for $27 credit, and I bought the 409 call for an $11 debit. So overall, that is a credit of 16 cents or $16, and I had two of these. So why was I bearish at this time? Well, I thought the MACD was looking pretty weak down here. It's been under the zero line for the entire morning, and it looked like it was about to cross again and move lower, which is bearish for the stock market. But because the blue line hasn't crossed below the orange line yet, it was still kind of unconfirmed, so I should have waited a bit. So good thing I got out of this trade, and I'll show you when I did that. Because I have two strategies to get out, I have to sell both of them, and I sold one at basically 11:38 and the other one at 12 o'clock. And as you can see, I sold them both for a loss because I originally purchased the two for 16 credit, but then I sold them for a 30 debit and a 46 debit. So altogether, just this one bear call trade that I got wrong today, it costed me about $46. Luckily, I was able to make it back with other trades though, as I'll show. So I got out one here at 11:40 and then the other one here at 12 o'clock. And the reason I got out is because once I saw that the market went above the highs of the day, then it's probably going to go higher, especially when the MACD is now clearly above zero, which is bullish for the market. And as you can see throughout the day, it's been pretty much above the zero line all afternoon. And the reason I didn't sell both at the same time is because I was actually waiting for a pullback. But then once the stock got up to like in the money basically of my 108 short call, I thought maybe it's not going to backtest and just continue going up. So that's why I sold my other one here. And then my next trade, which was this one at roughly 1140, this is when I sold two 407 puts. So pretty much the same time that I closed out one of my bear calls, I also sold two 407 puts. So this was a bullish trade because, like I mentioned, MACD showing strength, stock market moving up, and we've basically created higher highs because this is a higher high than this, and higher lows. This is a higher low than this for the day. So chances are we're going to move up, which is why I sold 407 puts here. And this time I'm more confident that the market will go in the direction that I wanted to because I have confirmation in both the stock price and the MACD. And then later on in the day, you can see I added another 407 put. This one, I didn't get as much for it. I only got $10 instead of the $59 that I got before with the first two. And then near the end of the day, 11:30, so that's 2:30 p.m. Eastern, I bought back one of those just to hedge my bets a little bit. I'm not going to miss the $4, but just in case the stock market tanked at the end of the day, like it sometimes does, then at least I would have locked in the gain I made from this short put. I'm not going to go over the 409 calls because I kind of talked about it earlier in the video, but I will point out these two, which I haven't talked about, which is just a quick trade. You can see I sold the 109 call at 10:30 for 68, and then I bought it back 7 minutes later for 62. So that's just a few dollars in profit. But I'll show you what I was trying to do here at 10:30. So that's 1:30 Eastern, which was over here. And why I was bearish because I started by selling this 409 call to get into the position. Okay, so 130 is right here where this red candle was. What I was thinking here is if you see the MACD, it's going down, which is bearish. And at the same time, you can see that we have a really red candle here, and it's going down from the previous couple of candles. Plus, it's almost like a double top from just like half an hour ago, where the stock went up here and then down. So I was thinking at this point, because all of these wicks on the top of these bars, I thought that's actually kind of bearish, right? Because this is looking at the 5-minute chart. So every 5-minute bar, the stock did go up to a certain point, but by the end of that 5 minutes, it was always pushed back down. So that combined with what looks like a double top had me thinking this could be the high for the day. Like the SPY was trading at roughly 408.9, and I thought maybe it'll just go down from now on. At least there's a possibility to do that. So this is why I sold a 409 call over here, which is pretty much at the money, because if the market is going to go down from here, then selling an at the money call should actually expire worthless by the end of the day. And then the reason I bought it back like just 7 minutes later is because I started to notice, maybe it's not going down, because I would have kept my position if the market were to have done that, which it could have. But instead, you can see that it sort of went sideways. And not only that, but I saw this wick over here, and I wasn't comfortable holding my 409 short call at that time. You can see 409 is like right here. So I got in here and pretty much got out here, which is good because that position would have been negative had I held it and then the stock market went up like it did in the next hour here. The next one here is at 243. And that was a bear call at 410, 411. So I sold the 410 and bought the 411 for an $11 credit. And that was for two quantities. And that was right here. So once again, I decided to be bearish here because of the MACD. You can see we're seeing a negative divergence now, where not only is the blue line below the orange signal line, but it's also now getting further away from it, which is also indicated by these dark red bars getting bigger and bigger. So as soon as I saw that these two lines were diverging away from each other, plus, of course, they have been going down for a long time. And whenever you have the MACD going down, but the stock market is going up, something has to give. Either the MACD has to change, or what is most likely the case is that the stock has to change and go down, because usually they go in the same direction. Plus, again, we have these wicks up here on the top side of these previous bars, which signals to me that maybe this is the highs for today. I know I said that back here, at like 1:30 when I sold the 409 call. And obviously that wasn't the high for the day. But in this case, it looked like I did kind of pick the high for the day. So I was bearish here. And I didn't want to go with 409 because that would be in the money. So the next strike price above that is 410. So I sold 410, bought 411, and just left it until it expired out of the money, because since then the market has been going down and it's never came back up to that level again. So there was no need for me to get out of this position. And then the only other trades I put in today were these two, which are spreads, but these are expiring next week on Monday because tomorrow's a holiday, so there's no trading. And then on April 10th is Monday, and that's when these two expire. These are pretty much just credit spreads, and if you combine these two together, you basically get an iron condor. I have a bull put spread here, meaning I want SPY to close above 402 on Monday. And then I have a bear call from 410, meaning I want SPY to close below 410 on Monday. So the sweet spot is anywhere between 402 and 410. And I think the market is going to go down on Monday, which is why my bear call is closer to the money. And you can see the credit I made for it is also a lot more than the bull put. Because if I go to the daily chart and just hide my drawings for a second, you can see there was a lot of momentum last week and into early this week, but then we started to fall and the market kind of rolled over. You can also tell by the MACD, the daily chart, that we're seeing a convergence between the blue line and the orange line. So for next week, at least for Monday, I expect the market to go lower. However, for the week, I'm not sure because there is a channel that's kind of going up like this over the last couple of weeks. So I think the next touch should be on the bottom because we've gone from up to down, up, down, up, down, and we just touched the top of the channel. If we go down to the bottom of the channel, then that means on Monday, the market will go down, but by the end of next week, which is April 14th, then we could go up again to maybe around 420. So that's why I want to keep my option duration short, at least for the next week coming up here. So that's pretty much it for the trades I made today. I had one bearish trade, or two actually, one over here and one up here, and one bullish trade, which is down here. I managed to get the bullish trade right because the market went up, and then this bearish trade managed to get that one as well. But this one here obviously wasn't the correct call because the market went up instead of down. So I shouldn't have been bearish here. I should have been bullish. But you can't get everything right. I'm just glad I got out of this bearish trade position over here before the market went up even further. And then this is sort of a neutral trade where I started bearish, but then I closed my position and got bullish afterwards, which probably wouldn't have made too much of a difference because you can see the market went up and then down. So it kind of traded sideways and closed the day pretty much at that point. So if I had a strangle here, meaning I would sell like a 410 call and maybe sell a 408 put, then by the end of the day, both would have expired out of the money. Because up until this point, the stock was pretty volatile, but then it just kind of went flat from there. Okay, so on Monday, I made $65 in net premiums. Tuesday, I actually lost money, but at least I made all of this money back plus more. The next day, on Wednesday, earned $87 in profit. And then, of course, today, I went over this in today's video, so you saw what all of these trades are. The gross profit was $211, and then I paid about $32 in trading fees, so that's $179 in net credit. And for the week total, that is $296, which is a little bit less than what I usually make, but because it's a shorter trading week, it's kind of expected. So that is a roughly 1% weekly return because I started out this challenge with $30,000 in capital. I gained about $300 this week, about 1%. Now, what about the SPY? Well, it pretty much hasn't changed for this week. You can see last week, Friday, the end of the week, it closed at about 409. And this week, basically flat. It ended the week at about 409. So pretty much unchanged from last Friday. And if we look at barchart.com, we can see the year-to-date is 7% return for the SPY, and the weekly return is down just a little bit. So if you look at the chart here at week 14, which is this week, I'm up about 16%, and the SPY is up 7%. So both are doing well. Now, I will be on vacation for the next few weeks, so I'm not going to be trading any SPY options until I get back in May. So what that means is I'm probably going to sell some long dated options, not too long, maybe like a month out, so that I will have time to come back and close them or manage them before they expire. And I'll probably put those options in sometime early next week, because by this time next week, I will be on a plane for a family vacation and I won't have access to my IB trading platform for the rest of the month. So check back for another update early next week. Thanks a lot for watching, and I'll talk to you in the next one.